It's a big day tomorrow, probably the most important one of the week. Nothing's changed on my risk radar because the messages being sent by the market remain pretty mixed, but a few charts that I pointed out yesterday as the key ones have had some developments, but not enough to change any of the yellow that's on here, reflecting generally the range-bound nature of bonds, dollar, and crypto. Think about bonds again today. We caught a bid on the auction, and suddenly we reverse a good bit of what happened over the last two trading sessions in treasuries. Same thing with BTC. Oh wait, that's a chart. Well, don't spoil that one. First, Apple. The breakout today is obviously a very big support pillar for bulls. That is huge. Now, sometimes Apple takes on a little bit more of kind of a value tilt, a little bit more of a safety tilt. I do think generally, if you're looking for melt-up style action, you prefer to have NVIDIA as your leader rather than Apple, but this also could be the market putting Apple into the AI envelope as well, and so it might just be as good as NVIDIA to power us forward. So that's obviously a good thing and an indicator of risk welcoming by the market ahead of tomorrow. The overall bid in stocks too, buying the dip this morning, though we did say that was likely this morning. Rallying, a different story though when you've got CPI in the morning followed by the Fed and an FOMC outlook for the SEP. The expectations on dot plots are that we'll shift a little bit more hawkish here and maybe take another cut or two off of the previous expectations. Look at the way Bitcoin is kind of struggling at the old high. So while Apple builds the case for bulls, Bitcoin's rejection again overnight with some selling out of nowhere takes a little piece off the table though. That also does speak to the nature of Apple leading more of a high quality type of rally than a highly speculative one. Doesn't mean Bitcoin has to crash by any means, it's just a little bit of a pullback, but it remains suspicious and indicative of a maybe slight imperfection in the market and the general animal spirits that remain very, very concentrated into the AI stuff. Now, what I think will be the tiebreaker is, of course, bonds and yield curve and how it relates to the dollar. I've spent a lot of time looking at the dollar chart this week. You know how I feel about the dollar. Basically, if you get to 106, 105, spot 7, then the dollar maybe becomes a problem. For the yield curve, it's big moves in either direction. The 9-month chart of the 10s and the 2s really hasn't gone anywhere. As you can see, we've been flatlining up there for months. And as long as that happens, I think the market can take whatever comes in stride. But if you see the yield curve get pinched further, if you see it go down out of that range or steepening too quickly, that's when there's a little bit of shakeup in the Goldilocks narrative. So it should be a good day. I will see you in the morning. Thanks for joining. Market on close. Make sure you download the Schwab.